So it looks like Hyundai and Kia have emerged as Tesla's biggest US rivals on electric vehicles. Last year, their growth actually outpaced Tesla's and the broader EV market. Today, we're going to show you the range of their vehicles and how they made this possible. We've also got a great chart to show you that lists out the top 15 electric vehicle manufacturers and their sales in 2023 as compared to the year before. In 2023, they had a combined 6 million sales of electric vehicles, where in 2022, they only sold 4.1 million. That's a 49% growth. So why exactly are people even saying that there is a slowdown? We've got Larry Goldberg joining us. He's a multi-entrepreneur. We're going to ask him these questions. What do you think about Hyundai and Kia? Welcome, Larry.
Thank you, Herbert. Great to be here.
So this is the news. And I know you've already been saying, you've been predicting that Hyundai Kia was going to be the second next to Tesla, and it's turning out to be correct again. Hyundai Kia emerged as Tesla's biggest U.S. rivals in EV. A pair of allied Korean car makers pushed to launch electric vehicles ahead of competitors. And just to show the various, what the cars look like, they obviously look good. They look premium. They're being well received in the U.S. So the executives at these companies view the EV transition as a way to reset their image with buyers and draw in more well-heeled customers who might not otherwise consider these two brands. So I think this is a big differentiator between the other brands, the other automakers, because these guys were seen as a low-end car and they go, oh my God, electric vehicle is going to transform. Let's take this opportunity. Let's invest. Let's just make that switch right off the bat, because they were coming in from I think if this is true, this makes sense to me as why they did that. As the race for electric vehicles heats up, these guys are pulling ahead of their larger rivals in the US. So they captured jointly, Hyundai and Kia, the number 2 slot, trailing only Tesla, which still holds a commanding lead. Analysts are saying that both of these are poised to cement or advance their lead over the non-Tesla rivals this year with aggressive pricing. So they jointly captured number 2 slot. Oh, this is the same thing I just said. So behind their growth, which last year outpaced both Tesla and the broader EV market, is an aggressive bet on the technology that was placed last decade is now materializing in showrooms as sales for EVs have taken off. What do you know about this?
So the reason I've been so keen on Hyundai Kia is because if you consider their strategic position in the auto industry, they're latecomers. Their first focus in terms of marketing, their strategy was to say, we're going to do engineering as good as Mercedes. And they actually, focused on and transmitted to the market that they're going to out-engineer the German engineers. They did a darn good job of it and really grew very dramatically in the auto industry in general, and were very successful in penetrating the US market. They have this massive factory, 2 factories, a Hyundai factory and a Kia factory in Alabama. I passed it twice going to Starbase, visiting on my road trips to Starbase, massive factories, and they're building a huge EV factory now. So what they did is they transitioned from this, right, we're going to be better engineers than the Germans. They've transitioned to this focus on EVs. And they did this 3 years ago. And when they did this, I was very impressed by the commitment, the focus, and the execution, the early execution. A lot of people, criticized the early cars, but the early cars were superior to the early cars from both Volkswagen on the one hand, and of course, the Japanese manufacturers that really got nowhere. So when I looked at the Germans and the Japanese and saw what Hyundai Kia, which are the Koreans, were doing, it was clear to me that these people were committed and they had proven themselves in terms of their original strategy to be able to execute that strategy. When I started seeing the cars, I was very impressed. The cars did not reach the quality or the technology advancement of the Teslas, but for a classical auto manufacturer, they were impressive and they were the first generation. So now they're continuing to execute. They're continuing to execute extremely well. And I think they're going to be a player in this new race. And I think they're going to outstrip the Japanese shortly. That's my view.
I don't know how you have so much knowledge. Every single topic I throw at you, you know quite a bit. Oh, I think you have a full-time job. That's what you've been doing. It's all Tesla.
Well, I'm a retired guy, and I just, just while away.
You're busier than ever as a retired guy. Okay, so I haven't shown this, which I should have shown a little earlier. So this electric vehicle sales, Hyundai and Kia, they sold the second most. Here's Tesla. And then the red is 2023, and then the pink is 2022. Hyundai, and Hyundai Motor Group is really far behind, but they're still better than GM, Ford, and Volkswagen, and that's what this shows. So they're really going to be here. And then the goal there, and everybody thinks, is they're going to keep getting even further ahead. They're going to separate from the others, as we know they've slowed down. So the other thing about Hyundai and Kia is that they have a broad lineup of vehicles compared to other rivals, including Tesla. And then their battery tech allows for fast charging speeds, and their models range from a large family SUV to cheaper battery-powered crossovers and sedans. So they say here that while Tesla still holds a strong grip on the EV market, last year accounted for 55% of all BEVs, its share has been slipping in recent years as new rivals have come forward. Did you want to make a comment on that?
It's such a spurious observation. When you're in a position that Tesla are, with inventing the space and with such a massive lead, by definition, as other people enter into the space, they're going to have to grow faster than you just to get anywhere. I mean, Tesla's lead is so gigantic that their 1% improvement completely obliterates a 4% improvement by the follower who's less than a quarter of their volume. So it's the law of large numbers. And if people don't understand the law of larger numbers after all these years, then what can I do? I can't teach them. It's just very funny.
Okay. Well, I knew you wanted to say something about that. Okay. So it says here, the bottom paragraph, Hyundai, its luxury brand is called Genesis, and Kia combined sell 9 electric vehicle models. They account for 8% of electric car sales in the US. That's a lot. That's a lot. It's getting there. The 32,000 Kona to the Kia EV9 starts at 55,000. So again, it's a broad range. And I just said this. So let's take a look at the photo here. Yeah, okay. So if you look at this, you can see the Tesla Model Y. The price range is $50,000. This is price range here, and then this is driving range. So price range here, and then you can see the Kia. They have price range all the way around the Model Y. The Hyundai is really close to what the Model Y is, and then you can see how they're competing with the Mach-E. The Cadillac Lyriq is all by itself over here, and your Volkswagen. And in terms of range, this is where it looks like that they also offer quite a bit of, because of the different models. They have different kind of ranges, pretty wide compared to what everyone else is doing.
So, this is where one can conduct a master class in marketing. Because you're looking at, companies which have very, very stark a huge stark and stark contrast between marketing approaches. On the one hand, you have Tesla, who have exactly 2 mass market models in production, versus these other companies that have not only multiple mass market models, but within each model, they have so many different trim ranges. That has been the way the auto industry grew up, and that's the way they're pursuing the EV strategy. Tesla's strategy has been, truly brilliant, particularly in the early years, to enable them to actually get the volume up of just this one or two, these 2 models really, which happens to really translate to in classic auto speak to one model with two different body shapes. That there's the crossover, and then there's the sedan, and they sort of share the same chassis. Well, Tesla haven't done exactly that, but you could say the Model 3 and the Model Y are sort of like that. So Tesla have taken a completely different approach, and it's an approach that has limits, and they're reaching those limits. Ideally and classically, they would have introduced next gen a year or even 2 years earlier. And whether the pandemic was the cause of that, or whether the internal debate between Elon and his lieutenants about whether or not to go pure or full self-driving on a robo-taxi and not do the smaller car, that may have been played into it. It may have been the pandemic. For whatever reason, Tesla have delayed that entry into that lower market, which I think is hurting them right now. And I think there's this gap in the market which these auto companies should be tackling and focusing on. And the one that is really doing a good job of it is Hyundai, Kia. So I would say that that's really that's what's going on right now. And it offers, it's a classic case. It's a classic case. So it's kind of the, innovator's dilemma. And Tesla are not moving as swiftly or as robustly as they could have. They're not being as fleet of foot as they could have been. So the next gen, in my judgment, is a year to 2 years late to the market. Now, it's not a bad thing in the sense that these other guys are participating. It's helping the general, transition to EVs, and that's taking place in spades in China. It's not happening more slowly here, but in Europe, the pressure is on, and in Europe, it's beginning to happen. And in Europe, there are a lot of smaller there are not a lot of players that are playing in that smaller market that are doing well. So Tesla has to move fast, and Hyundai are really, playing into that space. So it's an interesting moment right now, and it all turns on how quickly the next gen can be delivered to the market for Tesla. That's really how I'm reading it.
Yeah, absolutely agree. Maybe a little harsh that Tesla didn't roll out the next gen sooner. There's lots of reasons.
We have to be harsh. We have to be harsh. We have to,
That's okay.
It is incumbent upon us to, identify areas where, Tesla can do better.
Yeah, I guess what I'm just trying to say is they could have rolled out a smaller compact car, but they're here redesigning the entire production line with an unboxed model. They've introduced they had a 48 volt factory that you've did deep dives on. These are tectonic changes in technology that slowed them down because it's new tech, but it will just revolutionize everything in the future. So it's maybe okay, but okay. So a couple things you've just...
We could do a whole program about the whole strategic marketing and whether a lot of conversation about that. But okay, we'll let that go.
Okay, you and I can continue the conversation. It's going to be a fun one. I'm not totally against what you're saying. I just, we got to put it all in context, right? Okay, so there's a couple things you said that was very prescient. So one thing you said in the previous show we did was leasing is something that Tesla has not taken advantage of that they should. And that's exactly what this article says. So this is how Hyundai and Kia kind of overtook GM and others, because they took advantage of the EV tax credit rules to offer attractive lease deals. So I think the way it works, right, is you can't, a lot of cars do not qualify for the EV tax credit. But what you can do is there's a loophole that if you lease it, then it can qualify for it. The only difference is that Tesla decides to own the car after the lease versus why not, let the consumer own the car after the lease. But because they did this, attractive leasing deals, which you've been proposing and you've been hammering, you think that Tesla should do this. And I bet you're going to be, that's another one that you're going to predict that's going to turn out right. We're going to hear them push leasing. And it's going to, like you were one of the said. The other thing they said here is, how did they make this kind of move? Well, they stepped up and made the investments in EVs, and they came up with the right combination of styling, features, and cost. And that's where you're saying that maybe they found a spot. They didn't go directly against the Model Y. They went around it, is what they did. And then, so this is, a decade ago, Hyundai and Kia were seen as underdogs in the car industry. They're churning out inexpensive vehicles, panned for their looks and quality issues. That has shifted in the recent years, and spurred on by the Model 3, they said in 2017, they're going to roll out a lineup designed from scratch for electric vehicles. They took the page from Tesla. They decided to make that move, and that got them to an early start, and things look good. Okay. Any last comments on that before we move? Yeah.
Brilliant
you like
strategy.
them. You like them. Yeah. All right. So let's talk about this. So this is the top 15 competitors. This is a beautiful chart from AJ. You can find him on X at ALOJOH. He's got great charts.
Fantastic stuff. He really is worth following. He does really outstanding work.
So this is the battery electric vehicle sales for 2023. Now that 2023 ended, a number of vehicles sold in thousands, and then he split it up by quarter. So you can see here, this is Tesla, BYD, then you got Volkswagen, BMW, and so forth. And yeah, I think if you look at the fourth quarter here, this is a longer bar than Tesla's fourth quarter. That's why they're saying BYD made more sales finally, and it'll probably continue. So, but you can see everybody else falls off, but you can see the brands. Hey, BMW, we just talked about them. They're there.
Yep.
So they're doing very well. Okay. Now, here's this point. You see 15 automakers. Combined, they made in quarter one, 1.19 vehicles, quarter two, 1.4, quarter three, quarter four. In total, in 2023, they made 6 million vehicles. Okay. That same 15 automakers made in 2022 only a combined 4.1 BEVs. This implies a 49% growth. There is no slowing in BEV adoption. Anyone telling you something else doesn't have a clue. So when you pull out and look at the total numbers, 22 and 20 versus 23, it's the 50%. That's what happened. That's exponential. What's your thoughts on that stat?
Well, we have to break those out by market. And, some markets are doing incredibly well and doing that transition. Other markets are definitely feeling the pinch. The one market that is not doing that well, really, or doing as well as that median or as that total, is the US market did not grow as fast this year as we thought it would grow or that it grew last year. Some of the German markets slowed specifically in December, when some of the government grants rolled off. And so December was a big disappointment month in Germany and in the UK, and it really impacted European sales for that quarter. So one can find markets that are doing incredibly well. One can find other markets where there are somewhat of a slowdown, resulting in all these newspaper articles and so on. But I think those are really they are really exceptions that kind of prove the rule. The market as a whole for EV cars continue to grow. The market for internal combustion engines continue to decline. You only have to look at China. I know we say this again and again, but in China, I think we're going to see the end of the internal combustion engine within two years at this rate, because at a point in time, we've spoken about this in the past, at the point in time when you get below a certain level, it stops being economic to even manufacture the things. So I think we're going to see that happen very shortly in China. When that happens in China, that's the canary in the, it's going to happen everywhere.
That you Love you, Larry. Because again, I get to witness all these statements you were making 6 months, a year ago, and you were predicting that it's going to be slow and then massive, precipitous decline. And you're so different than everyone else because you're very slow. And then like this, it's like, I've never heard anybody else who predicted that way. This year, in a few months, they're predicting that China's going to get to the 50% sales already. They're at 40%, and the prediction is just 2 more
I
quarters.
just don't see how you manufacture an internal combustion engine car in a factory when you lose 50% of your volume. I mean, this industry is very, 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 very narrow margins, and those margins depend upon volume. And so when your volume falls to a certain amount, you have to stop manufacturing. Just look at the American cars that are in China today. They're stopping the manufacture of them.
They can't do it. Yeah, they're
German
handing it
cars-
off to the Chinese manufacturers. Yeah.
Yeah, and the German cars have stopped manufacturing. So it's only a matter of time, and very short time, when the Chinese cars stop manufacturing as well. So we're at the tipping point, and anybody who thinks not, these stupid Wall Street Journal articles, and it's not just the Wall Street, it's all of the American newspapers, just stupid. Oh, it's slowing down. Oh, EVs are over. Oh, the days are. I mean, come on, guys, get a brain. I mean,
take math again. Okay. I appreciate this, Larry. That was fun. Thank you for sharing your knowledge with us. Follow him on X at Tesla Larry. Thanks, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.